All right, great. We'll kick it off here. Thanks everyone for joining. This is the second installment of the New Jersey Cannabis Trade Association's Business Builder series. Just a note for everyone in attendance. This is recorded. The recording will be made available after the fact. Certainly thanks for joining us here today. So just a quick background on the NJCTA, and then we'll kind of set the stage for where we are and certainly where the state of New Jersey is going on this process. But first about the NJCTA. The New Jersey Cannabis Trade Association was founded in 2020 and is comprised of the state's permitted medical and adult use cannabis operators. The mission of the NJCTA is to ensure the legal cannabis marketplace is not only safe, accessible, and affordable, but also equitable and just. To achieve this, the NJCTA strives to shape public awareness and encourage implementation of thoughtful and responsible cannabis policy in New Jersey, and serves as a singular voice before the executive branch, legislature, Cannabis Regulatory Commission, and the media on the complex matters that impact our industry. Again, the goal of the Business Builder series as well is to ensure that that kind of wealth of knowledge that our individual members and operators possess, and kind of that insight and foresight as to how the marketplace operates and moves, gets shared with the broader public. And certainly all those license hopefuls, including social equity applicants, diversely owned license applicants, impact zone license applicants, and otherwise have the benefit of that insight. So we're so happy folks can join us here today, or separately are reviewing this video after the fact. So just to set the stage for where we are in the state of New Jersey, to this point, we've had about 800 more or less conditional licenses issued by the Cannabis Regulatory Commission. And just last week of October, for the first time, we've seen full licenses issued. So that's 18 conversion and annual license applicants, broken down about 10 conversion approvals and 8 annual approvals. So what we're starting to see is tremendous movement out of the state of New Jersey, and certainly much more activity to come, right? And what we'll talk about here today with our panel of experts, and for those experts we have on the line, these are all cannabis attorney practitioners, professionals who regularly work with cannabis businesses as they navigate this process. So again, we have hundreds of license opportunities here in the state of New Jersey, so many different applicants at different stages of the process. And part of the goal of this installment of the series here today is to give some insight to that process. So we asked folks in advance to provide some questions, and we'll start off the day asking those questions to these professionals here. As we start getting into some of the questions that are specifically geared towards our professionals, we will give a little background on the expertise of those individuals, just so everyone understands where folks are coming from. So with that backdrop, I should add, anyone who has unique or independent questions here today should feel free to ask them using the Q&A feature at the bottom, and we will proceed from there. So the first question I do want to ask to Cecilia is just to kind of touch on this distinction, right? So conditional licenses versus annual licenses, and certainly knowing that there's 800 more or less conditional licenses issued, the path and process and the distinction that these folks are going to have to follow. But let me first introduce Cecilia. Cecilia is a member of the cannabis group here at Foley Hoag, and advises clients on licensing, regulatory, and compliance matters in the legal cannabis industry. Prior to joining Foley, Cecilia was corporate counsel at Acreage Holdings, a publicly traded company holding a large and diverse portfolio of cannabis cultivation, processing, and dispensing operations in the tri-state area and across the United States. In her role as corporate counsel at Acreage, she advised the company on all aspects of the business, including transactional, regulatory, compliance, real estate, and labor employment matters. Cecilia also serves as the co-chair of the cannabis section of the New York State Bar Association, co-director of the Student and Academic Affairs Committee of the International Cannabis Bar Association, and currently sits on the board of NJ Normal. And a passionate advocate for cannabis education, Cecilia is a frequent speaker and panelist on a range of topics such as cannabis legislation, state cannabis licensing, social equity and business law, and volunteers her time to mentor students and young professionals interested in entering the cannabis industry. So Cecilia, if you would kind of give us a sense of this distinction, right? So let's say that you're one of these 300 conditional license awardees. There's this great moment of, I think, validation of, oh, we got this conditional license. And on the other hand, it's to a certain degree, the hard work only begins. So give us a flavor of what is this difference between a conditional and annual license? What does the conditional license give you the ability to do? And what's in store for these conditional licenses as they prepare to convert to full annual licenses?
Great. It's so good to be here, everyone. Good evening. So to answer your question, Mike, the difference between the conditional and annual license is that the conditional license essentially allows you to complete the majority of the requirements for licensure on the back end. So where the annual license requires proof of local support, site control, and over a dozen narratives, conditional applicants who qualify, you have to meet certain income threshold requirements in order to qualify for a conditional to apply as a conditional applicant, are able to apply without submitting that information. But, you know, as you said, once you get the conditional approval, that's where the real hard work starts of having to pull together all these other elements that you're still required to submit. And applicants who obtain the conditional approval have 120 days and can apply for a 45-day extension to submit their conversion application, as well as the other required elements. So the proof of local support, site control, and the narratives and the like. But the state does recognize that a lot of conditional applicants have been facing issues with getting site control, given the tight crunch on available real estate, which my colleague Jeff will touch upon. So, you know, they are also granting additional extensions to really help out folks. And, you know, because it's in their interest to see people make it through the finish line. So it's great that the state is willing to do that.
And I tell you what, I mean, and that timing element, you hit the nail on the head. It's critical. And you know, as we've always said to clients and folks, you know, pursuing the conditional path, you know, 120 days, 165 days, even further extensions seems like a lot, but in the blink of an eye, you can see that time frame whittle down. And I always think back to that, you know, I think time in this instance is like that old phrase about money, right? The question is, how much money do you need? And the answer is always more. And that's certainly the case with time. So again, there's so much for folks to do in that, you know, 120, 165 plus 35 days timeline, right? And they fall into a couple different buckets. You know, Cecilia, you previewed a little bit the real estate side of things, but there's a lot of corporate considerations that go into it as well. So I'd love to ask a question or two of Tanisha here, but just to give a brief introduction to Tanisha and her practice. Tanisha focuses on advising public and private companies on a wide range of corporate matters, including formation, financing, mergers and acquisitions, and general corporate governance matters. Tanisha is an active member of Foley Hoag's business department, working with clients in the clean energy, climate, sustainability, and technology sectors on innovative technologies and business approaches to solving energy and sustainability challenges. And Tanisha works with sponsors, investors, and developers on all aspects of renewable energy projects, tax equity, sponsor equity, and debt financing, acquisition, tax credits, and state incentives. And Tanisha's been working with a host of different cannabis businesses here in New Jersey and otherwise as they navigate this process. Tanisha serves as co-chair of the firm's Black Attorneys Collective. And prior to joining Foley Hoag, Tanisha worked as an associate at an international law firm. So Tanisha, I mean, I'm going to ask you probably the most open-ended question there is, but just with that conditional license process in mind, What are some considerations that conditional licensees should be thinking about from a corporate perspective in this conversion process?
Hi, yeah, thanks, Mike, and thank you all. I'm happy to be here on this panel. This is actually an open-ended question, but I will start first with financing, because similar to what you were just saying earlier, time and money. So you have the time, now you need the money. And here, I want to first keep in mind that if you have an MBE or WBE status, keep in mind that that ownership is going to have to stay at 51%. And so before you can start trying to have investors come and invest in the company, you need to keep in mind and keep their expectations in mind that you cannot give away more than 49% of the company. So if you are trying to get investors, where do you want to get funding? You may think banks are your next step, but most likely that's not going to be the case, given that this is a federally illegal industry. But on top of that, because there's not a lot of safe ground for the banks, they're not that happy or willing to give loans right now, given the market. So a lot of what we see so far is first your friends and family, trying to get investors that way, your own personal finances, that's one opportunity as well. And in that sense, you kind of, usually your friends and family potentially may not actually want to be active players in your company. So that's one way to give away equity, but also keep in mind that you have sole control and manage of the company. So that's one way to continue to have your interest in mind for how you want your company to corporately and govern. Next, you could have your third-party investors, like your venture capitalists, personal connections. Another thing that comes up a lot is, say you may not have the understanding and knowledge to do certain aspects of your license, like if there's growing as part of it or marketing. So you may want to have an advisor. So in one instance, you want to hire this advisor, and of course, they're going to ask for equity in the company. One way to do that, instead of actually having them become a member of the company, whether it's an LLC or a corporation, you could establish an advisory agreement and provide them with equity that way. So in that sense, you're not allowing them to control the company in any way, but they're just as a consultant or an advisor, and then they get a little piece of the pie in that way. Now, some people want a little bit more, and as an investor, they actually want to become a member of the company, and that allows them to have more control over the governance and the manager's decisions of the company. So if you have an investor that is asking for that type of relationship with the company, you're looking in more to have them have a capital contribution to the company. And that means that they're going to be becoming a member of the company, and they're going to give some type of investment. And in that sense, one or two things I would say to look out for. One, as I stated earlier, keep in mind the 51%. And secondly, also keep in mind who and what their intentions are to the company. Given this is a new industry, you make sure you do your background checks and investigate the individuals that you want to invest in the company and actually become a member and have governing decisions about the company. These are kind of things that are more of the soft skills versus just the hard skills when it comes to managing your cannabis company. But we've come into different situations so far of relationships not working out. And so you want to kind of at the forefront handle those situations early before you want to remove someone as a member. And then lastly, one of the financing issues that I see come up a lot is that you're sharing your profits, and you're going to have to consult your members anytime you want to make a decision affecting the company. And so say you want to provide what we call a convertible note financing. Now, this is a way to provide short-term debt at the forefront that converts later into equity. And so on some occasions, it may not ever convert into equity. So you're not, the risk may be low there, but just in case, say that your company is going to be purchased later on in the future, that convertible note is a way for investors to invest in the company without having to have a valuation of the company. And at this point, given that you're conditional license holders, you probably don't know the value right now of the company or even, you know, received an evaluation. So though convertible note financing is a way to get equity into the company, or excuse me, get financing into the company with giving equity later and not at the forefront. And I guess lastly, I would say another tidbit to look out for is having a tax advisor is going to be important in this situation. And especially because the more investing that you have in different forms, whether it's your equity, whether you're having advisors or consultants coming and you're allowing them to have a piece of your company, the more complex that this gets, it might be better to convert your company from a limited liability company to a corporation to navigate that equity better. And additionally, having those tax consequences really looked at before you make these decisions would be helpful. I know that was a lot, but definitely follow up if you have any questions.
Those were all great points. And I think even as you touched on these high level issues, it gives folks insight into the fact that like none of the very few of these determinations are easy ones to make. And you need to consult with your lawyer. You need to consult with your existing membership group. You should be consulting with your tax professionals. And the only other thing I would add to that is, you know, what I'll say is the regulatory overlay on top of that, right? So you talk about raising friends and family money, right? Which makes sense, right? If we have a new business venture and you know, you want to share the benefits of that with those closest to you, you want to trust the folks that are giving you that money. One thing I always warn people about is when you're seeking that money from people, understand that those individuals are going to have their own regulatory disclosures, right? So, you know, some of the task in this too is understanding, well, how does this CRC vet which people doing what, right? So if people are coming in as equity owners, they're going to be treated as owners if they hold 5% or more, and they're going to have this disclosure obligation with providing these personal history disclosure forms. If they're coming in as a lender, right, just giving money in exchange for the obligation to be repaid under a note, same thing. They're going to have to provide personal history disclosure forms or entity disclosure forms. And then what is the impact of someone acting as a lender and then separately acting as an owner, and what limitations do the regulations impose on them, right? We know lenders can lend to up to 7 different cannabis companies here in the state of New Jersey, but you know, how do you make sure that you're having these conversations with whomever these people are and setting the stage for those expectations, right? I always think that's one of the hardest things. Someone's agreed to give you all this money to get your dream off the ground, and then you say, hey, look, can you fill out this 15-page disclosure document, give me your tax returns and your government ID and everything else, right? So, you know, again, all of this has so many different levels of professionals that need to come in and make sure that you're doing everything you need to do, not only to achieve your goal, but to do it in a way that the CRC is asking for. So that was super helpful, Tanisha. I'd love to turn over to Jeff Ganguly and ask some questions about what I think is, you know, the $1 million question, if not the 10 million, if not the $20 million question here in New Jersey, which is the issue of site control. As Cecilia touched on at the top of the program, this is a big difference between what you needed on the conditional, which is you didn't need site control, and versus what you need on the conversion side of the application, needing site control. But just a little bit of background on Jeff. Jeff is counsel in Foley Hoag's Administrative Law Department and focuses his practice on transactional real estate matters involving acquisitions and dispositions, leasing, financing, and development, including matters in support of the firm's life science, cannabis, and renewable energy practices. For over 20 years, Jeff's primary area of practice has been commercial real estate transaction development, representing developers, property owners, emerging and established businesses in the acquisition, permitting, financing, construction, leasing, management, and disposition of mixed use, office, retail, industrial, multifamily, and laboratory and life science properties. So his specialties include all asset classes of leasing, including laboratory and life science facilities, office, warehouse, and industrial, retail, as well as ground leases in connection with development, acquisition and disposition of commercial properties, and so on and so on. Jeff, certainly my go-to guy for leasing and property acquisition related matters. So again, we know site control in New Jersey is critical. Give us kind of your experience, your sample size of kind of the common questions that you get or the common issues facing, whether it's conditional license holders or annual license holders, as they start thinking about what site control means for them. LOI, lease, purchase and sale agreement. What have you seen in the marketplace, Jeff?
Sure. Thanks, Mike. And happy to be here. Site control, you need a place to operate and your business. And New Jersey is a competitive state for real estate for many asset classes. As Mike was mentioning, I do a lot of work in a lot of different asset classes. The big ones for cannabis are really our retail spaces and warehouse and industrial, which has been kind of the key asset class for cultivation. There's some conflicting things that everybody needs as they pursue obtaining site control in the place they're going to operate. You want certainty in terms of business terms, but you also want flexibility and you also want exclusivity. So most people start out with an LOI or a term sheet, which usually has your basic business terms. In some states, an LOI or term sheet was sufficient to begin the application process. But at some point, you have to show to the regulatory agency that you have, a firm commitment to be able to either acquire or lease space to operate. The LOI or the term sheet is helpful because you want to spell out as many business terms in advance as you can, because as you get farther along in the process, once you obtain a license, you've immediately added value to a property, and you want to be ahead of that in terms of having had a business commitment as to how much you're going to either pay for a property or how much you're going to pay in rent to lease it. Because if you don't get that squared away early, the price is going to go up later once you've added value to that property. So as far as certainty, right, the best thing you can do is buy and own a property, right? If you own the property, you are really only answering to local zoning and to regulatory authorities, but you don't have a landlord. So that's probably the greatest level of certainty, but it's also the most expensive, right? That's the most difficult thing. And it's difficult to commit to purchasing a property when you don't know you're going to have a license yet. And if you don't get it, you may not want this property. Depending on where it's located, its value may be as some type of a cannabis facility, but it may not have the same value if it's going to be used for something else. So, that's one of the complications that leads most people to pursue leasing. Leasing is more flexible because there's not as big of a financial commitment up front, and it gives you the opportunity to spread out payments in a way that you wouldn't be able to do when you're purchasing. But again, back to certainty but flexibility. Getting a commitment to lease a property in a competitive state like New Jersey, you don't necessarily want to simply rely on having a term sheet or an LOI, because until you sign the lease and have a fully enforceable lease, you could lose the property to someone else, right? Someone could come in with a better offer, and even though you've got a term sheet and it may say it's binding, You know, lots of things can happen. So, you know, it behooves applicants, if you're going to lease a property, to try and to take the time and, you know, spend some of the money up front and try and get a lease negotiated and signed while you're pursuing your license. So the upside to that is you've got exclusivity now, you've got a signed lease, and this is a binding contract, a legally binding contract, and a legally binding commitment from your landlord that you're going to be able to lease the space. The downside is, you know, without being able to get flexibility negotiated into your lease, you know, you may have now committed yourself to 10, 15 years of lease payments, right? So, you know, it ends up being expensive. It could be as expensive as purchases. It's spread out over time, but, you know, it's a big financial commitment. So, you know, the maybe most important thing that applicants need to do is be able to try and negotiate some flexibility into your lease. And that comes in a couple different forms. I mean, one of the biggest is having a permitting contingency of some sort, right? You need to have the ability that if you don't get the license to operate, you need to be able to get out of your lease, because without having a specific, you know, termination right or some right to get out of your lease, once you sign, you're committed most of the time, and so you know, it's a long financial obligation. So permitting contingencies are probably one of the most important pieces of the lease to negotiate. The other thing is trying to get financial flexibility. You know, landlords want some certainty also, and they want cash flow, and they know that a successfully permitted and operating cannabis facility is hopefully for everyone gonna yield a lot of cash flow. So that tends to translate into higher rents. But most people are entering into leases for facilities that, you know, require being built out, and they're not going to operate right away. There's not going to be business cash flow for the tenant for some time. So it's critical to try and have some flexibility in your lease while you're continuing to go through the permitting process. So, you know, what we try to do is you know, come to some financial arrangement for what rent is going to be, but, you know, try and stagger that so that there's a lower rent period early on where you're paying lower rent and you're paying something so that, you know, the landlord's getting something, and, you know, you're paying for the right to have the exclusivity to be able to use, you know, this site. But, you know, you're going to be incurring costs of permitting. You're going to be incurring costs, you know, while you're ramping up. And then, you know, most cannabis tenants have to pay for their own build out. You know, it's not like other asset classes like a life science use where, you know, landlords are going to give you money to help build out your space. You know, you're likely raising your own capital to build out your facility. So, you know, a lot of upfront costs. So if you can negotiate, you know, as low a rent as possible early until you can get to, you know, get your permit and then complete construction to start operating, then you can try and back end, you know, essentially make up rent payments, or, you know, jumping to a higher rate on the back end to allow you to have, you know, excess capital early to complete your build out. And then, you know, you're going to move to be paying a, you know, a full rate for the remainder of your term while you're operating. So that's kind of another critical component, in addition to, you know, permanent contingencies, is having a flexible rent payment plan. And then, you know, there are a lot of other considerations. I mean, if you are building out a space, and depending on what your use is, if it's retail or cultivation, you know, in addition to just not only having the license, you've got other permitting issues. You've got to comply with local zoning. You need to make sure use is allowed. You need to make sure that the property you're going to lease complies with, you know, all the various zoning requirements, from, you know, setbacks to parking, minimum parking requirements. There's just a multitude of municipal requirements you have to comply with. And while this comes up more typically when you're purchasing, even in leasing, depending on what type of build out you're going to do, you know, environmental issues can be a critical issue as well. I mean, certainly if you're purchasing a property, you absolutely have to do environmental due diligence before you purchase a property. And even if you're leasing, you know, if you're doing ground up construction where you're digging, you need to do environmental diligence, because some of those liabilities can fall on you, even as a tenant, even though you don't own the property. So those are, you know, those are 2 or 3 big considerations. There are a lot more, but I guess that's a good start.
No, and you know, and even as you talk about, you know, permitting contingencies, right? Like those contingencies, I think, you know, in the adult use phase of New Jersey's licensing are even substantially different from what they were in the medical licensing a couple of years back, right? Because when I think about permitting contingencies, like think about the fact that a lot of towns now have a local licensing process, right? Winner take all. Or other towns, if they're kind of ill-advised, they'll give out, you know, resolutions of support to multiple different entities, and it's kind of like a race to the finish. Who gets approval first may or may not meet the local licensing cap for that license class. You know, a lot of towns will require a site plan application for cannabis businesses, let alone the regular zoning considerations that you talked about. So I think those, especially those permitting contingencies, are just so critical for these cannabis businesses, you know, as they race to get a state license in. But oftentimes what's going on at the local level is more, you know, I don't want to say more important, but has more hoops to jump through, right? Which is actually, sorry, go ahead, Tanisha.
I was going to jump in too with that, to Jeff's point and your point that sometimes lenders will also include provisions where they only going to provide a certain amount of the agreed upon financing or agreed upon amount until they have the lease in place, or until they actually have a certain agreement in place. So that's another way, just putting them together on how, you know, you could be in talks to getting a lease, and then also getting in talks to have a lender come and provide financing, and you may only get, you know, 1/10 of the money at the time because it's contingent on something that's dealing with the leasing or the real estate.
That's a great point. And speaking of kind of those contingencies, you know, we said site control is one of the most important part of New Jersey licensing, especially as it relates to the conversion. But local approval kind of goes hand in hand with that. So Cecilia, you know, I know I get the question all the time. I mean, you know, what's an ideal local licensing process, and I always respond by saying, you know, of the 100+ towns of New Jersey that have opted in, there's probably 100 different versions of it, of what local approval looks like. But what specifically do applicants need in terms of local approval? And how does an applicant even begin the conversation with a town as to whether or not that town would give them that approval? So give us a little flavor of what that experience is like for the individual applicant navigating this local process.
Sure. In order to demonstrate local approval, applicants need to provide a resolution from that locality's governing body, and the resolution has to expressly authorize that the town has authorized the type of cannabis business license being sought by the applicant to operate within that locality. And if the town has license caps, which many do, unfortunately, that the resolution also has to say that the issuance of the license to the applicant would not exceed that limit. And what sounds obvious is that the resolution must also be issued under the applicant's legal name. which sounds really obvious, but we've seen resolutions that have the wrong name on them and have to be reissued. So make sure you meticulously review the resolution to make sure it has all the requirements. We often get asked whether a letter of support from the mayor of a town is sufficient for proof of local support. And the answer to that is generally no, unless the municipality does not have a governing board. So if the town doesn't have a city council or some other sort of governing body, then the applicants would be permitted to provide the letter from the mayor. So in terms of beginning the conversation with the town, really the first step is to do your research. And this is where hiring an attorney, I know we're biased, obviously, but this is where hiring an attorney can be a real value add. It's just really important that you know the local requirements for obtaining the resolution, so you're not spinning your wheels in the dark. And as Mike and Jeff touched on earlier, every town has their own rules and process for obtaining the requisite approvals. And even just in terms of getting the information, every town handles that differently. For some towns, they have a perfectly crafted website that has all the information that you need on there. But I have to say that is few and far between. So in a lot of cases, a lot of that information isn't publicly available. So, it helps to consider calling the town clerk or town solicitor and speaking with a town official to gain further insight into how that town's process works. And it also can be useful for determining or finding out sort of like what the town dynamics are when it comes to cannabis. For example, one town solicitor I spoke to on behalf of a client indicated that the town really only wanted operators with large footprints rather than small micro businesses. So, in that case, if you're interested in that town and you're a small micro business, you need to know that it might be a uphill battle because the town would prefer larger operators. And that's not the sort of information they're going to plaster on a website. So you also want to confirm that whether the town has any license caps for your license type, and where that process is, who's in the queue, how many folks are in the queue. So you have a sense of like what your chances are of getting a resolution and being able to fall within that cap and not exceed the cap. Also just research the town. I kind of touched upon what I said earlier. I mean, do a Google search just to see if there are any articles about sort of the town's receptiveness to cannabis businesses and sort of like what town officials are concerned about, so that you're prepared to address them. We also recommend attending the town meetings, especially those that have cannabis related business on the agenda. It's very important to get your name and face out there and start making the right connections in the town. And, in those meetings, you'll also learn what the city is looking for, which can help you tailor your appeal to align with that. And you also want to be prepared to tell your story, demonstrate how your business will benefit that town. And, that could look like a few different things depending on the town. Towns generally want to see hiring plans to hire local residents. It's in their interest to help their residents find employment. Partnerships or donations to local community-based organizations. You really want to make sure you're doing your research about that, so you're supporting the organizations that are local to the community and important to the community. And one thing you also want to be able to demonstrate, or that can really help your chances of getting that local approval, is if you can demonstrate that you'll be able to get operational within a relatively short time frame after obtaining licensure. One thing I'll say is be prepared for delays. It can take time to navigate through the bureaucracy of towns, and it can often feel like herding cats many times to obtain the approval, but it's all part of the process. So just be prepared for that.
Yeah, and that's a great point, CC. And I should just add, just because I know we're getting closer to time here, if anyone has any other questions, feel free to drop them in the chat. But what I would, CC, I would agree with you completely, and I think the doing your research part, I think, is so critical, right? Because we've seen folks certainly come to us and say, oh, I'm really fixated on this town. I understand that they allow this specific cannabis use. And by the time they come to us and they've spent time looking at properties or otherwise, they didn't look into or notice the fact that that town had a local licensing application period that's already closed, right? So like, the critical point is, don't spend your time spinning your wheels on a town that may be out already, or maybe has, as you said, has issued enough resolutions to be hitting the cap, right? And so, the other thing to kind of bear in mind with these towns too is they're doing this for the first time as well. I mean, remember, it wasn't until August of 2021 that they were affirmatively required to pass an ordinance one way or another. And that's why you saw the vast majority of towns opt out of these cannabis uses, because they said, hold on a second, we want to wait and see how this program actually fleshes out. And, with all the great things the CRC has done, I think one of the criticisms that towns have levied is, well, look, we don't exactly have a manual of how to carry out this local approval process, which is part of the reason you see so many towns, taking so many different routes and processes to this, right? So unfortunately with the towns, I don't think there's a one size fit all, other than, as you pointed out, do your homework, do your due diligence. I think it often starts with looking at the ordinance itself, the cannabis opt-in or opt-out. As you said, it'd be great if they posted it on the website, all this other information, not always the case. So it can take a little digging, but it certainly makes the biggest difference in terms of figuring out whether there's a pathway in that town or not, right? And, as to the global point that we said earlier, you get that conditional license, you're on the clock, right? So you don't want to spend your time on bad opportunities. So one last question for Cecilia. We've talked about a couple different things. We've talked about, hey, look, what should I be thinking about in terms of my business? If I take on capital, how do I got to amend it? What should I be thinking about? We talked about site control. We talked about local approval. What else is going to go into this conversion application? Give us a sense of what it actually looks like when everything's uploaded into that portal.
Yeah, so the bulk of the conversion application is comprised of narratives, which are essentially scored measures that are designed to assess an applicant's competency to operate a cannabis business, as well as the applicant's ability to comply with the rules and regulations. Cannabis is a controlled substance. The states want to make sure that the operators are operating in a safe manner, and in a manner that prevents diversion, and other sort of theft crimes happening in the town. So for the New Jersey applications, there are roughly about 18 to 20 required narratives that span various operational areas such as security, quality control, adverse event reporting, recall, packaging, and others as outlined in the notice, which is essentially like the Bible for your application narratives. And those narratives, when you add them all up, it adds up to several hundred pages. So it's quite a lot of information to prepare. And essentially writing a high scoring narrative entails outlining your operational practices in a way that is clear and concise and compliant with all the applicable rules and regulations. And, this can be difficult for new operators because you're having to write these from scratch before the business even exists. But I think what's nice about New Jersey is that the regulations contain a lot of operational rules that you can really build your narrative around. I think another thing that makes narratives or can allow you to score more points on your narratives if you highlight experience that is relevant to operating a cannabis business. Now, you don't have to have run a cannabis business before, although if you have anyone on your team who does, it's very important it's very important to highlight that. But to the extent you or your team members have experience running a business of any kind, really, but especially a highly regulated business, that's something that you really want to make sure that you highlight in your narratives as well. So the notice itself outlines the various subtopics that must be addressed in each narrative. So you want to make sure that for that narrative, you hit all those subject areas. You know, and you also want to make sure that it's easy and clear for the reviewers. They're reviewing hundreds, if not thousands of these. So you should organize the narrative in a way that highlights each of the topics so they can see them very easily and, you know, be able to check it off, and include citations to any relevant statutes or regulations. Another thing I'll add is to be mindful of page limits, especially if you're required to provide diagrams or attachments to exhibits, because that can quickly eat up pages too. But the goal is to really address every required subtopic in as much detail as possible within those page limits. And then the last thing I'll say too is that, you know, consider entering into some sort of contingent, you know, partnerships, you know, that are contingent on you winning the license. You don't want to commit to anything, you know, unless you get the license, but, you know, related to your operations that you can mention in the application. And the reason I say that is because regulators, much like the towns, want to see that you're prepared to get up and running as soon as possible after receiving the license. So to the extent you can demonstrate that you've started initiating discussions with key vendors and service providers, or even security consultants, for example, that's something that would really, really help boost your bolster your narrative.
Those are all great points, Cecilia. So what I'll say is I think we got through a lot of the questions that we had asked prior to this, and we've answered some of the questions as good as we could that have popped up throughout this. So if you know any other questions from anyone else, feel free to reach out to certainly anyone who's on this thread, whether it's Tanisha, myself, Jeff, or Cecilia. You can see on there for the New Jersey Cannabis Trade Association itself, we have the Twitter handle as well as the LinkedIn handle as well as our website. If you do, feel free to reach out. But with that, let me at least put it to our speakers here. Any last closing thoughts that folks should be thinking about, you know, short and to the point? Anyone? Cecilia, Jeff, or Tanisha? Cecilia?
Just to plug getting good advisors, you know, it's worth the investment up front rather than trying to do it all yourself and then messing it up anyway, and then having to get advisors on the back end and losing time to get your application completed. So, you know, again, I know we're biased, but, you know, I have to say, get some good attorneys, consultants, lawyers, tax advisors, accountants. It can really help go a long way. So,
Jeff?
I will echo that point and just say, please do not ever sign a lease without having had an attorney look at it. It's a lot more difficult to try and fix issues in a lease after it's already been signed than before. And for whatever reason, people get bogged down with so many other components of this very complicated process that sometimes they think, well, you know, I've signed a residential lease before. It's a lot of boilerplate and it won't be that big of a deal. But you know, from the cost perspective, this is one of the most significant financial commitments you're going to make, and please have a knowledgeable person review it before you sign it.
Great point, Jeff. Tanisha?
Yes, I would say, I think it's echoing everyone else about being weary and doing your research, but I would say before you allow any person to become a member or director of your company, ask yourself, what are they providing? What benefit are they bringing you? And that would help you navigate people into your company and advisors to your company and maintaining equity ownership of your company before you actually give away ownership. So ask yourself those questions before you do that, because once they're a part of your company, it's hard to get them out. So it's better to do it in the forefront and really have people that are there to support the business and grow the business, and not just reap the benefits. So that's what I would say.
Easier to get married than it is divorced. Yep, 100%.
Some would say as long as you have a good lawyer, but to your point, yes, Mike.
And again, the last point that I would just say is, this is a big industry that gets a lot smaller, as you network and interact with folks. And that's certainly, for us all at Foley, both myself and the firm, we serve as general counsel to the New Jersey Cannabis Trade Association, as well as other licensed operators. Part of the reason New Jersey Cannabis Trade Association exists is to be that kind of thought center for some of these issues, practical, complex, or otherwise. So certainly that's why the New Jersey Cannabis Trade Association exists as an organization here in New Jersey. And that's part of the reason that they put together this great program, which is the Business Builder Series, which will continue with additional installments. So again, I urge folks, follow New Jersey Cannabis Trade on Twitter, on LinkedIn, check out the website. Really, it's the goal of the member organizations of the NJCTA to kind of help spread that good information about how to make this industry that much better. So thanks everyone for joining us here today. Like we said at the top of the hour, this program is recorded and will be made available to the extent you have any other, you want to watch it again. And again, any other questions, feel free to reach out to either us or anyone else at the NJCTA. But thanks again for joining us.